Good morning and welcome to my monthly update on alternative asset fund administrator and auditor league tables. There are over 600 fund administrators and 500 audit firms servicing the private markets. I'm George Evans from Convergence. Convergence is a data and analytics firm focused on the alternative asset management industry globally. Note that our league tables are available only to Convergence clients. League tables can be purchased at the Convergence e-commerce site, which is at convergenceinc.com. Today, I will provide some commentary on the market we saw from December 2020 to December 2021. I will be joined this month by Mike Trinkus. Mike is the CEO at Four Pines Fund Services, a relatively new fund administrator over the last 2 or 3 years and a long-time Convergence client. How are you today, Mike?
I'm very well, George. How about yourself?
I'm doing great, and I want to thank you again for joining us. We're delighted to have you here today. Before we get into a few things, I just have a few topical things that I thought our audience would be interested in your point of view. Just want to hear a little bit about Four Pines, and you're kind of a fairly new fund administrator, and I'd love for you to talk a little bit about kind of what you're building and your vision and how that whole journey is going so far.
Yeah, sure. Thanks. First of all, thanks for having me. Very much looking forward to the conversation today. I think we have a lot of good things to talk about, and yeah, I'm ready to get at it. So, Four Pines, we're, as you said, a fund administrator. This is my second go in the fund admin space, as you know, and really what we tried to do is take a lot of the lessons that we learned from the first time and apply that to today's market. We're in a constantly evolving market, as you know, and doing what we did previously the same time, a second time around, doesn't make a whole lot of sense. What we've tried to do is really learn from what we've previously done, and a big area that we're focused on this time around. Well, before I go into that, what I will say is at the end of the day, I think this market still wins with the right people and good people. So we are very people focused, very culture focused. That's a given. And that's similar to where I was last time, but even more so this time around. But where we're really focused as a firm is around data. As you know, data is driving everything we do in this market, whether it's the GPs themselves or the service providers. And the service providers, I'll use that term loosely. It's the accountants, it's the fund administrators, it's the lawyers, it's everybody that plays in the space needs access to this data, and we all need it for different reasons. So we have a real big focus on data, and it's data that we're trying to really normalize and curate in a way that we haven't really done in this space before. So we're really focused on technology, how we implement our own technology, how we staple on some other technologies that we're using. So there's a really big technology focus to what we're doing. As you know, we were born in January 2020, right before the pandemic hit, and everything that we've done since then has really been in the cloud. And we were probably pushed forward a little faster than we were anticipating because of the pandemic. But here we are today, and in that regard, we're better off for it because everything we're done has been built in a way that is collaborative, regardless of where people sit. So we're excited about that. We have a lot of interesting things from the technology standpoint that we're doing as a firm. And even though we're a smaller firm, we do have some things that are really, like I said, interesting for the fund admin space that we're working with folks on.
Yeah, well, it's interesting as we, see the growth in the market and we see new launches. We clearly have seen just through the league tables that just lots of advisors are moving to the mid-market, right? And I think sometimes the culture is different. The technology can be sharper, and the people. So it's an interesting phenomenon right now. What do you think, Mike? What do you think has been so far the hardest part of the journey? Maybe not the most, maybe the most challenging, and not that you're not getting it done, but what really did anything surprise you in this 2.5 year journey?
Well, yeah, I mean, there's so many hard things that we do, and if you think compare and contrast, the first time I did this, I didn't launch, or we didn't launch with a client this time. So really, building up that credibility with prospective clients to say, hey, these guys might be young from a firm perspective, but they're very experienced. And because of that, we're going to take a chance on a newer fund administrator. So it's always challenging getting clients. But what's interesting, I think, and this isn't specific to us, people, right? Getting the right people. And I think a lot of folks are struggling to keep people, to find people, and it's a very expensive market. Now, I think from a people perspective, we have access to people, and from an operator perspective, we have found a lot of folks that are really interested and want to be a part of something different, something new, something exciting in that regard. But the challenge, as you probably know, as a startup, competing with what some of the larger firms could pay is always a challenge. And I didn't expect the market to kind of take off where it has in that regard. But otherwise, right now, things are going to our 5-year plan that we outlined. And as you know, things look a little different between what you planned for and what actually happened. But net, when you sort of add it up all together, we're kind of right where we want to be from that perspective. So
Yeah, that's
everything's
great.
challenging. No.
Yeah, and you referenced the kind of the war on talent, which is we see it in spades in the market, right? And I think people are looking very hard at legacy companies versus kind of new firms and new cultures and different work models, hybrid work models, and
Yep.
I think there's a way, which it sounds like you have to capitalize on that if you're smart. What I thought about when I looked at 21, it was a banner year of fund administration, mergers and acquisitions, mostly acquisitions. And as we do Convergence proper does some M&A work for admins, and we were probably never busier. We saw, according to what I've pulled together, there were 22 acquisitions in 2021, and just 3 in the month of December, right? CSC bought Intertrust, JTC buys Essential, Ultimus buys FD, and that's all just to wrap up the year, right? What's your view on M&A in the space you're in? Do you think is it the bigger just getting bigger? EU admins, a whole different animal to deal with in the market. Are seeing more PE investing in the market? Just curious, kind of your views on just M&A from a fund administrator's vantage point.
Yeah, that's a good question, and there's a lot to unpack. You hit on several different areas, and I'll give you a broad sort of statement, and then if you want to dive into each or any one of those in particular to get a bit more nuance, I'm happy to do that as well. First and foremost, absolutely, last year was an amazing year from an M&A perspective to see all of the deals that were completed or at least signed last year. Was it a surprise? Not really. I mean, I think when I first did this, when I first sold my firm back in 2017 timeframe, that was, I would say, right around the beginning of this particular run that we're seeing. And I still think there are, there's some legs to it. At the high end, we've seen the big get bigger. At this point, I think the interesting part to me is some of the big are getting bigger, but do any of those folks in that larger fund admin range, do they merge together to put a few more behemoths to get together? I think you're seeing Apex do that a little bit right now. With some of the acquisitions they've had over the last year. Does anybody rival that? Hard to say, but it wouldn't be surprising. Everybody's competing, looking for ways to improve margin, improve operation excellence, and there's certainly a school of thought out there that in M&A is the way to do it. But one of the interesting things for me is when you look at that next tier down, a lot of those folks have recently been bought out and have now rolled it into a larger fund admin. So it'll be interesting to see what emerges next in that next tier down. Who's going to benefit from the larger M&A acquisitions? There's clearly going to be some fallout that happens from a client base and whatnot. So I think you're going to continue to see the M&A, the large scale or the larger shops active in the M&A market. But you bring up a really interesting point regarding, say, PE shops coming into the space as well. I do think there's a lot of active PE shops looking into the space. I think it's a challenge for those folks, but it also represents a lot of opportunity. You yourself know how many fund admins are out there. So if you have a strategy around consolidation and a good plan around integration, you might have something there, but getting 5 or 6 firms to come together and make it all work presents a challenge in of itself. But it was exciting to watch from the sidelines last year. I think it'll continue into 22, though I think the DNA of it will be slightly different.
Yeah, I think what's going to happen is you're going to see some of those kind of big, but not biggest, start to play for scale, right? And the second thing I think you'll see is people, and we'll get to this a little later, but adding other services, right? But I thought I was just kind of looking at this while we were chatting. Of those, which I hadn't really totaled it, of those 22 acquisitions, 13 were done by European administrators.
Yep.
So that tells you, and what we've seen firsthand is it's very difficult to put 4 people on an airplane and put them in an office in New York and say start a business, right? Yeah. So just add water, right? So they don't, and what they do is look for something bite size or mid bite size to get in the market and get some credibility, right? And then build on that. How about switching gears a little bit, Mike, on very topical stuff, right? That you read about every day, right? Whether it's on LinkedIn or in any of the rags. ESG, digital, SPACs, probably the 3 I read about the most. Curious what the Four Pines view is on this stuff and what you're thinking about. Are you creating product? Is it part of the market you want to be able to serve? Just love to hear your thoughts.
Yeah, absolutely. 3 topical, items there. That's for sure. From an ESG perspective, I think it's interesting because this reminds me back in 2014 a little bit from the cybersecurity standpoint, as from the standpoint of everybody is becoming a lot more aware of it. Everybody is starting to think about policies around it and procedures around it. So I think from an ESG perspective, we're taking a wait and see approach in terms of how we offer services. We have a solution for it, but it's more of a white label solution that we're using as opposed to our own. I think over time, we will very likely add an ESG component to what we're doing. But I think there's a lot of uncertainty around what exactly needs to get done. Mm-hmm. The policies are still being sorted out. We've talked to a few different folks about it, and we've been given sort of 3 different answers around it.
Yeah, you probably talked to 3 different people, right? And got 3 different
exactly.
Answers. Right.
Yeah, that's exactly right. So I think while everybody's talking about it, folks are clearly executing on it. I think more broadly speaking, there isn't enough direction from my perspective to do anything on our own. And, at some point, I think we will. I think it's a natural extension of what we do. We have a lot of the data, especially if you're going down into the underlying portfolio companies. in working with the GP around gathering that type of data for them. So that's our broad sort of approach to ESG right now, and it's something we're watching very closely and paying attention to. From a digital perspective, let's define digital for me for a second.
Well, let's stay with let's go crypto.
Yep.
Right? Bitcoin, crypto, let's just go right there.
Yeah, sure. Again, we're taking a wait and see approach as a firm. I think all fund administrators need a strategy around crypto and the like. We're currently working through that right now. We are seeing opportunities in that space, as I think a lot of folks are. What's interesting, as some of the folks that I've talked to in the space, and this is where I find this fascinating, some folks have run into issues with crypto, for example, with compliance. The compliance arm of their firm, and they're not really allowed to touch that, which I thought was interesting. And I understand it to some extent, but there is a need there. I don't think crypto is going anywhere. I think it's becoming more acceptable, more mainstream every single day. You're seeing lots of folks now accepting it as payment. So as an industry, I think there's a lot of work that we need to do to figure out from an operations perspective, a risk perspective, et cetera, how we go about tackling that market. But if you look at the accounting firms, they're all, taking the work. There's lots of crypto funds out there. So they've figured it out, and it makes sense. They're a little bit further along than we are, and they have to deal with it a bit sooner than we do, because there's no mandate to outsource it per se, but you probably have a mandate to audit it. So that makes sense to me. So we're spending some time with our friends in the public accounting world to try to educate ourselves. But I do think it's something that the industry itself will continue to educate, and then we'll move along into that space when we feel ready as a firm.
How about the SPAC world? Just a quick thought on that.
Yeah, SPAC world, we don't spend a whole lot of time in it. It's interesting from an investment standpoint, especially if you look at the last 2 years and the volatility that's been associated with it, and some of the things that have come out of it lately. But from our perspective, at the end of the day, you're really more of a public company reporting operating model than you are for what we do at Four Pines. Maybe some of the larger folks might get into that space, but we at this point don't have any plans to attack that.
Well, listen, I think at your size, right, you can't be a jack of all and master of none, right? And I think
Correct.
I think you've got to pick your spots, early, right? All right, last question, topic I wanted to talk with you, and I've been very appreciative, of your time. We're seeing in the market, we're seeing in a lot of our M&A work, administrators wanting to add professional services to the mix, right? So administrators differentiate themselves through people and technology and pricing, but there's a school of thought that, at the end of the day, the advisor kind of has vendor fatigue, doesn't want to buy from 10 people if they can buy from one, right? Yep. So, we've been working, personally, on looking at professional services companies for some of our clients, right? So they could be tax firms, managed IT, cyber security, outsourced CFO, outsourced CCO. And you saw even in the market this past year, the acquisitions, right? You take somebody like an IQEQ, goes out and buys Gray Line Partners, which is a compliance firm, goes out and buys Constellation, right? Et cetera. So it's starting to happen, and the thinking clearly is that you're solving a lot of the advisor's needs beyond fund administration. So it may be early for you guys, right? But I'm just kind of curious what you think about that whole topic of bolting on, different professional services that the advisor's buying from somebody.
Yeah, absolutely. It's 100% happening. From a Four Pines perspective, we're not necessarily ready for that right now. But I think from an industry perspective, this is where I think the industry is going. We're going to likely see a lot of M&A activity around this area. They're natural extensions of what we do. Compliance is a perfect example. Everything that we do on the back end from a reporting perspective, we have our SOC audit, and we build our policies and procedures around compliance, and we do it in a way that is really built for our clients, which are registered with the SEC, et cetera, et cetera. So I think all of those add-on areas are areas that make a lot of sense to me. We've been talking about this, George, since my when I first got into the fund admin space back in 2013. We talked a lot about initially compliance. We formed some strategic relationships with providers because of the natural extension of our access, as well as the services that we saw. We're in there and we know our clients extremely well. So we know what they need. We know that they need compliance. We know that they needed cyber and so on and so forth. So I think it makes a ton of sense to do it, but yeah, to me, you have to do it in the right strategic way. I'm not sure I would put all of them on equal footing as to where I would start. I think IT managed services, that's a whole different ball game than what we do in the fund admin world. But I think that compliance, perfect extension.
It's kind of a no-brainer, right? I think compliance. The other thing I see on the PE front is a number of administrators wanting to not only service the fund, but service the underlying portfolio companies.
Yep.
Right. So if they want to kind of dip into both, they're really thinking about how to broaden their service, especially things like tax and compliance. Right.
Yep.
So, yeah. So it's an interesting time. So listen, I want to thank you. You've been you've been a great client of Convergence for a long time, and we're always appreciative of your partnership. And I want to thank you for spending a little time with us today, Mike.
Yeah, thanks, George. It's been a great journey working with the Convergence team. You guys have been very helpful to us, so appreciate that. Appreciate the words of wisdom you guys provide too on the many times that we've jumped on a call just to catch up. So thank you, and thank you for the opportunity today. And I look forward to continued success for both firms.
Yeah, thank you. Thanks. Great. Let me start with some comments on the administrator market, and I'll first start with just fund and asset growth. Over this 12-month period, December 2020 to 2021, advisors disclosed close to 110,000 private funds. That's a net increase of 11,600 funds, and that's almost 12%, which is pretty significant in terms of fund levels. And advisors also disclosed assets over that 12-month period of 25.4 trillion. And that's a net increase of almost 3.5 trillion, which is up about 16%. When you chunk it up and you look at the administrators, the top 25 administrators won 45% of the new funds that were disclosed. All other administrators won 21%, while advisors who self-administered kept that number pretty steady at 34%. On the asset side, the top 25 administrators won 55% of about 1.5 trillion in new assets. All other administrators won 12%, and advisors who self-administer kept about 34% of those assets. We continue to see very strong growth in PE funds and assets and VC funds and assets. In fact, assets growth in PE, we see close to 25%. And asset growth in venture capital funds over this period, we saw close to 46%. So pretty significant. Switching to auditors, and when you think about the auditors and their market share in the top 25, the top 25 auditors won 66% of those new funds that were disclosed, and all other auditors won 6%, while 28% of funds did not report a fund auditor. As we've talked in past podcasts, this is very fertile ground for audit business development, the not reported. When you think about the top 25 auditors, they won almost 89% of new fund assets. All other auditors won 2%, and 9% of funds on the asset side did not disclose an auditor. So you're clearly seeing on the audit side a little better market share by the top 25 than you are on the admin side. I think we're seeing more business on the administrator side trying to go to the mid-market. We're seeing that same growth with audit, right, in terms of PE and VC. So really a fantastic year for administrators, for auditors in terms of growth, and really the markets grew, pretty handsomely over that period of time. Lastly, I want to make a few comments on the 2021 administrator M&A activity. We saw actually 22 deals done in 2021, and interestingly, 13 of those 22 were done by European administrators. So many of those firms have set up shop here in North America and have decided to really, the way to get in this market is to buy something somewhat sizable. The leader of the pack was a Convergence client named JTC. JTC did 5 of those 13 deals. So those are my comments. I want to thank Mike for joining us this month, and it's great to be back. We're looking forward to a fantastic 2022, and I look forward to talking to you all in February. Have a good day.